Yo, what up, Tostie?
Oh, Norvin.
What
Yo,
up,
yo,
my
yo, what's
guy?
up? What's up? What's up? What's up?
What's going on, fellas? Norvin, you're here early tonight, my friend.
Yeah, I haven't been to
Norman,
your
my
lectures
boy.
in a minute.
Who
Yo,
let you back in?
before you start, can you check Nebius?
Bro, who let you back in here?
You.
You.
I don't
I'm
let you
out.
in here.
I'm outside right now. I just got out of the gym. I'm walking home. I'm gonna be muted.
Well,
Should I
good to
wait
see you, Dennis. Thanks for being here.
for the
No problem,
45?
brother.
It's at 48:33, Norvin.
Should I wait till that comes back to that big candle when it rallied and then enter some longs for
You
like
mean right
September?
here?
No, at the bottom, at that,
Here?
yeah.
Okay.
Or you
I
think it'll
can come
come
back
back?
down
Because
there for you,
look
bro.
at your cloud. It just keeps on ripping, yo. Same with Core Wave, yo. You see the move today? Holy guacamole.
Man, we melted today in the afternoon, man.
Worst fucking
Fucking melted.
the worst
Yeah. Yo, Toasty, what do you think about like
people
stocks
fucking
that
Here,
like
one sec. I'm gonna mute everybody. You guys can unmute though. Still hang.
what do you think about stocks that don't like dump when the market really melts like we saw today? Because I was looking at a company like Celestica, CLS, Core Wave, companies that are pretty much pretty solid and didn't sell. You think that's weird? You remember this one, right, Toasty? Yeah, I honestly think, yo, CLS has the core wave move cooking up. Once it breaks that new all-time high, it's just gonna go. Similar to like a VST scenario.
What's the ticker to CoreWeave, Norman?
Uh CRWV.
Oh yeah, wow.
Bro, I
Wow.
told River at 40, bro. I told him, bro. I'm like, yo. And he's all like, wait for that I think he said wait for a little pullback. And bro, this thing just went 500% in a
Wow.
month. I'm gonna retire, baby.
Yeah, this is a pretty sick one. This is newly public. What does CoreWeave do again?
Yo, check it out. Called Toasty Core Wave. Nvidia has a 78% hold in it, and then it
Mm,
also holds I think 28% in ARM, and then they just did an investment in NVTS also. But yo, listen, Toasty, it might sound ironic and I mean, it might sound delusional, but whatever. But this is where the ideas come from, fellas. Um, GEV. So CoreWave is gonna do the same exact stuff that GEV is doing right now. Pretty much GEV is the master of the data center turbines. Um, and CoreWave is pretty much gonna get a bunch of data centers, rent them out, make a huge profit on them, huge margins. And what do you know? Nvidia's already investing a 78%. They know something clearly.
yeah, I that's why I remember the name. I couldn't remember why I was familiar with CoreWeave, but yeah, of course it's the name that NVIDIA is in. Yeah, I mean this seems like it was a pretty simple one.
Yeah, and like obviously I had a 500% from the 40 level, but if you pull up GEV, I think CoreWave is gonna go to where GEV is at. And if you look at GEV when it starts to break out at the 160, 180, this is where CoreWave is right now. But people think is the top. No, it's not. It might pull back, obviously, but long term, they're winners. They're winners. You see the vertical chart. You see GEV. It's up 42% year to date, and the market is flat.
I mean, they are worth 82 billion now, so it's not quite as small as they were a couple weeks ago. Anyway.
Yeah, but yeah, that was just my question. I'm here.
Well, we'll talk about it more at the end, Norbert.
Yeah,
I want to
no
get
worries.
started. We're a couple minutes after, but yeah, we'll stick around at the end and we can talk about it a little bit more. But I mean, that is an interesting one. I haven't seen that one yet, so I do actually. Your point of view is interesting on that name, so I respect that. All right. So welcome in everybody. Tonight we're going to continue the volume price analysis course series with our fifth lecture in the overall series. And again, big idea today is that we talk a lot about just kind of recap of everything that we've covered over the last couple of weeks. And then we'll get into how to actually start incorporating this into your trading strategy. And Norman, I feel like you have been here over the last few weeks, so pay attention. You might learn something. But anyway, like I mentioned, we're going to start with a pretty decently lengthy recap of kind of everything we've covered over the last few weeks, and just make sure that everybody's kind of on the same page and we're all on the same level here and kind of have the same set of understanding in terms of this material. And then we'll start talking about how to apply into our own trading strategy. So with that in mind, let's get started. So I'd like to think that we've been in this series for 5 weeks now, so a lot of people are kind of familiar with the format, but I'll ask the question just in case. Is anybody here tonight outside of Norman who hasn't been in the volume price analysis course series in earlier weeks? I'm doing this for about 5 weeks now. Anybody who hasn't made it to a single one yet? Most of the names look familiar. Cool. Errol has not. Okay, Errol. Well, hopefully this initial part catches you up a little bit. But to be completely frank and honest with you, we're going to recap 5 weeks of material in about 15, 20 minutes. So it's going to move pretty quick. But all the lectures previously have been recorded, so I highly recommend taking a look at those from prior weeks. I'm certain you'll be able to get the same amount of value out of this lecture once you get through the rest of those. So hopefully we can keep you with us, Errol, but if not, I apologize in advance. All right, so with that in mind, let's get right into it. So again, kind of as I mentioned, we're in lecture 5 of the series now. And again, majority of us are all pretty familiar with what's been going on here. We started this course series at the beginning of May, and we focused a lot on the fundamentals of volume price analysis, what it is, how to use it, some of the more important pieces of it. We talked about stage analysis, moving averages, kind of other ways to identify trends and that sort of thing. And now we're really going to be putting all the pieces together. We talked about accumulation, distribution, all those sort of good stuff. And now really today is going to be all about putting all these concepts together and applying them into a real trading strategy. So I kind of talk you through the way that I like to view entries, exits, positions, that sort of thing. How I like to manage positions, how I like to enter and monitor different trades, all while leveraging the concepts from volume price analysis and everything else we've discussed in the course so far. CD's got a question. Did I say there's a place to re-watch? Yeah, so all the lectures are uploaded to YouTube, and I believe we're posting them these days in our latest classes tab. So if it's not in there, let me know. But hopefully, that guides you in the right direction. Cool. Okay, and just to kind of recap it one more time, main 2 goals of this course series are to first develop successful traders who have a clear understanding of volume price analysis, which I'd like to think if you've attended the first really 4 lectures, I'm hoping you feel like that goal is certainly satisfied at this point. And now we're working on really accomplishing this second goal, which is teach attendees how to apply the techniques of volume price analysis to help traders create an excellent trading system. And the intent isn't necessarily to make everybody trade with strictly volume price analysis, but I can almost guarantee you that by the end of this lecture, you'll have some ideas and ways that you could start to incorporate some of these concepts into your own trading system and your own trading strategy. So that's the goal really for this lecture. So let's get in. Let's get right into it, and let's start with a quick summary of kind of everything that we've discussed over the last few months or last few weeks, and where we're at today. So, and I'm going to try and slow down a little bit because I can feel how quickly I'm speaking and not liking it. So, starting off, basically, volume price analysis is a trading technique that combines the analysis of both volume and price movements to understand market trends and predict future price actions. And this is a super vague definition, but what volume price analysis really is a way to basically determine exactly how institutions are moving in and out of positions using volume and understanding patterns in volume. And we've talked about this a lot, but fundamentally, sometimes price can be manipulated, right? There's plenty of rumors going around that price can be manipulated, but volume is the one thing that really is the truth, right? It really reflects the amount of shares actually being exchanged at any given time in the marketplace. And as a result, we can really heavily rely on some clues and patterns and things that we see within volume in order to help more educated decisions when trading. So with that in mind, let's start talking about some of the fundamentals of volume price analysis. I hate this slide. I really want to remove this slide from this lecture series, but oh wait, never mind. Anyway, so the concepts that we talk about as part of volume price analysis are applicable to every stock on every time frame for every type of trader, which in my opinion is the real power of volume price analysis, right? It's not limited to any specific type of equity, right? It's not limited to any specific type of time frame or any type of trader, right? Whether you're a scalper or a day trader or a swing trader, right? These concepts are applicable and things that everybody can use in their own trading system. So that's why it's such a broad and important concept for us all to be aware of. So just a quick recap of volume. I'm sure we've really driven this point home over the last few weeks, but I gotta say it. Like I mentioned earlier, volume does represent the amount of shares traded in a given time frame. So at the bottom of this chart here, we have the volume bars here. And this is the weekly time frame chart in this specific example. So what we're looking at basically is the amount of shares traded per week, and the asset here is IWM. So these volume bars represent how many shares exchanged hands in a given week. And we've talked about this a lot, but the market is a zero-sum game. And what that means is for every single buyer, there's a seller. So one volume basically corresponds to a single share exchanging hands. And we pulled up this example recently in the time and sales, where we can see this happening live. So if we look at the 1 minute on ES right now, you can see it looks like we're ripping a little bit on ES. What we can see is transactions coming through, right? So these are real, these are basically instantaneous prints of volume, right? These are instantaneous trades that we're seeing. And we can see that as these trades continue to flow in, we can see the volume bar down here at the bottom of the chart continue to increment. We can see we got a lot of volatility right now. Look at that. We got 10. Wow, this is the best volatility we've had during one of these sessions. We got a 10 size order, 12 size order. That's a lot of money moving right now. Wow. Wow, this is moving really quick, actually. Something's going on. This is cool. This is a great example. So anyway, hopefully this helps visualize the volume bars that we see at the bottom of the chart literally represent real trades that are happening, right? Each one volume represents a single share sale or purchase. Anyway, hopefully this example has helped. This has been real volatile, so we see a lot of orders coming through. So anyway, pretty cool. All right. There's three main laws of volume price analysis, and we've talked about these a decent amount, and we're going to recap them. And I guess just taking a step back, we've started a lot of these lectures with a recap, right? Every single lecture starts by summarizing or reminding everybody what we talked previously. And the purpose behind that is to help everybody remember and really retain the information that we discuss in these lectures, right? Because this is one of the better strategies for teaching and learning is repeating what you're talking about and talking about it multiple times over a longer time period. Anyway, so that's why you hear me repeat myself a lot. So anyway, there's three main laws of volume price analysis. The first one is supply and demand. And what that law basically says is that in general, right, supply and demand are out of balance. And what that could look like is, let's say, for example, this is going to be the fourth probably time you've heard me talk about this example here. But again, let's say, for example, when a PS5 first released, there was a fixed amount of supply, right? Only so many stores had so many PS5s to sell. And demand was incredibly high, right? So what that resulted in is an increase in price because there were more people that wanted to buy the PS5s than there were PS5s available. And as more PS5s became available on the market and people wanted them a little bit less and less, all of a sudden the price came down to whatever the price is today. You know, it could be, I don't know, $300 for a PS5 or something like that. And that same kind of law or concept of supply and demand directly correlates to the market or other financial assets. For example, in general, shares or equities have a fixed amount of units available. So let's just take a quick look. Like, let's look at number of Apple shares available.
Yo, Toasty, you should also note that same as like a different concept, kind of like Labubus that are so in demand right now. Everybody wants them. Same as the stock. Everybody wants that stock. It's gonna keep on going up. But once it dies out, obviously it pulls back.
Right. So thank you, Norman. So thinking about Apple, Apple right now has 15 billion shares outstanding. And we can see over time, this number also can change. So let's see if this is going to give us a good trend. The number of outstanding shares can change. So we can see back in 2012, Apple had 27-ish billion shares outstanding. And now all the way today, they have 15 billion shares outstanding. So this number of shares in the world can change based on a number of things, right? Companies can issue more shares or companies can buy back their shares. And as you could probably imagine, if companies are buying shares, that's going to help the stock price, right? Because that's going to be decreasing the supply and demand could stay constant, right? The same amount of people could want to buy Apple, but if we're decreasing the number of Apple shares available, well, the price will probably go up. And same thing goes for the opposite side of the coin, right? If we're increasing the number of shares available of Apple, but there's only so many people who want to buy Apple and that number is not changing, well, the price is probably going to go down, right? I'm releasing more supply onto the market than what people want, and all of a sudden, share price begins to adjust. So that's the law of supply and demand. And again, basically what that's saying is that these two factors counterbalance each other to come up with a share price. The next piece is cause and effect. And simply put, volume is the cause and price is the effect, right? Volume is the real-time sales and purchases that we were just looking at in the level twos, or excuse me, time and sales. And we can see this again here, right? These purchases and sales of this ES contract are what are actually moving price, right? Price doesn't move because of volume, or excuse me, volume doesn't move because of price. Price moves because of volume, right? And we can see as more of these transactions come in at the ask, which highlights these lines green, we're going to see price increase. And if we see more of these transactions come in at the bid, we're typically going to see price decrease, right? So we can see these red highlighted numbers. We're seeing more transactions hit the bid. We saw price decrease for a little bit there. And now let's see if we can wait and see a couple more transactions flow through and we can start to see price change a little bit. And there we go. We're seeing more transactions at the ask and prices beginning to increase, right? So this is a really nice example and really good way of visualizing this exact concept, right? As volume comes in, right, as people begin buying and selling a given asset, price changes. So that is why, in my opinion, volume is the most important thing to understand, right? Volume is what controls everything in the market. Everything starts with volume, right? The market will not move if there's no volume. And if you look at a penny stock that has no volume, you'll notice that the price literally goes nowhere. And I'm sure we could find a couple. I can pull up a River's favorite probably. This one actually has got some volume these days. Oh, River's ELRA. Does this one have no volume anymore? Yeah, there you go. Beautiful example from River. Yeah, so This name has it's a 000, right? You can't even fathom how cheap of a name this is. And you can see that this name basically trades on this day. It traded 134,000 volume, or this day it traded 1 million volume, which that's basically the equivalent of $300. So when there's no volume, the price doesn't move, right? And while these price fluctuations are significant, this is a 100% ripper, this is a 70% dump. We're really moving a fraction of a penny, right? I mean, it's nothing going on. And if we zoom out on this name, you'll notice that price only starts to move when volume is high, right? Here we can see we got some real volume and we got a big move in price. Here we got some volume, we got a big wick to the upside. But outside of these times, price literally does nothing. Let's see, I think I got another good one. NFT, this should be a good one. Yeah, this is a great one. This is another penny stock, a great example as to why you don't trade penny stocks. And you can see when this name was kind of first getting started, basically little to no volume. Once we start to get some volume, we start to get some activity in price. And then finally, the big pump and dump. Anyway, so this is the idea. All right, and the last one, which is more of a kind of cheesier rule, but the last kind of law of volume price analysis is referred to as effort versus result, which is taken directly from Newton's third law. And obviously the market isn't a science and it doesn't behave scientifically, but this law generally still applies, which states every action must have an equal and opposite reaction. In the way that that specifically is translated into the market, looks a little bit more like this example. So on the left, we have a couple different examples of below average volume, or above average volume. And on the right, we have a couple different examples of what we would call a result. In this case, we're really just talking about a difference in price. Excuse me. And as a reminder, when I use the term spread, all I'm referring to is the distance between the open and closing price of a given candle. So as that spread increases, basically the move in price is also increasing during that period. So in typical markets, we would expect, if we see below average volume, we would expect a correspondingly small spread of a candlestick. And same thing goes for average volume, right? If we see average volume, we would expect an average size spread or change in price. And finally, if we see above average volume, we would generally expect to see an above average spread, which, going back to our penny stock example, this generally holds true, right? When we see this above average volume, we can see, real big swings in price. This doesn't necessarily need to just be penny stocks. Like if you look at something like Google, which is obviously not even close to a penny stock, we should see a similar example, right? Like here, we have far above average volume, and definitely this candlestick spread is much larger than average. Same thing here, right? While this spread isn't necessarily far above average, this gap certainly is, and we have far above average volume. Here, this is an interesting one as well, right? We have far above average volume, but not quite as big of a spread, right? So that's maybe something that we want to think a little bit harder about. Anyway, long story short, that's generally the correlation that we would expect. However, this isn't always the case, right? Just because we have above average volume doesn't always result in us getting a massive, nice bear bar or bull bar closing near its high or low, right? And that would be referred to as what's called a volume price anomaly, when some of these things can be intermixed. So for example, sometimes we see above average volume and a small spread. And I can't remember, I used to have a really good example of this. I think it's PLTR. Let's take a look. Somewhere, let me see if I could find it. I think it was, is it PLTR? I can't remember anymore. Wish I still had this on deck. No, I can't remember. Maybe it's Hood. Not really. Anyway, I can't remember what this example was, so I'm not going to be able to pull it up, and I don't want to just keep scanning for now. But anyway, long story short, right? Below average volume sometimes can correspond to a really above average outsized move. And other times, way above average volume can correspond to a really small move, right? And this doesn't necessarily mean anything specific, right? It could be interpreted as a more bullish or bearish signal. However, in general, this is referred to as a volume price anomaly, right? Which means that it's a condition that we wouldn't typically expect. Our typical volume price analysis knowledge and background typically wouldn't suggest that this sort of behavior would be occurring. And let's talk a little bit about that. And let's start to get into some specific examples. And we've covered these before, and I know Dennis is going to love these. So pick the phone up, Dennis, because it's the exact same slide that you've seen 3 times already.
Yep, I'm watching. I'm here.
you know exactly what this one is. So this is an example. We've looked at this one a lot, and it's a pretty succinct example. So anyway, on the left example here, which is the only one that we can see right now, we can see, oh, let me do this thing where I annotate. Sorry, didn't come prepared. Roblox went to 100, Norman. Hang on, that's too distracting. I gotta look. Oh my. Dude, are you kidding me? Bro.
What is that?
Dude, it's Roblox.
Roblox? So this is a moot
Bro,
point?
dude, no way. Wow. Dude, I had no idea. I'll show you where I bought Roblox. Let's see, where did I buy? It was 2023 July. I bought Roblox right here. Here, it looks a lot better here. I bought Roblox right around here, and I sold it right around there, I think, or there or something. Should have held. Wow, that's actually insane. That was just too distracting for me to look away from. Anyway, all right, back on track here. So, or let's get both examples up here, and then we'll annotate both of them at the same time. So, 2 different examples here about volume price analysis. So on the left, we have nicely rising volume as price continues higher, right? So we can see price is trending higher, and as price moves higher, we see these above average volume bars. And as we see these above average volume bars, we also get nice bull bars closing near their highs, right, with larger candle spreads. So this is an example of volume basically perfectly validating price. This is something that we would absolutely want to see in any nice strong uptrend. And we can see this in both examples, right? We have above average volume as price continues higher in both examples. So there's no difference there. The difference in these 2 examples is this specific bar right here, which is referred to in the image as the test. And if we just draw some kind of horizontal resistance level, one big difference between these 2 examples is both the volume and where the bar closed. So in the left example, you have a bull bar with a pretty large size spread with far above average volume, right? This is volume that's above any of the prior bull bars and also way above the average. On the right example, we have a bar with far below average volume, and it also has a really nice long downside wick, right? So in both these examples, this is the fundamental difference. And I've asked this question before, and I'll ask it again. Which one of you, or which one of these examples would you guys think is generally more likely to continue higher? Which one of these examples looks like a stronger uptrend and is more likely to continue above this horizontal resistance? The left example or the right example? I know Norman knows the answer. And you guys can put your answers in the chat. I want to see what you think. We've talked about this example before, so hoping we're on the same page, but I want to make sure I cover it if we're not. Any other answers? We got one answer from Bambino. I want to see a couple more answers. So which one of these, I'll ask the question again. Which one of these examples looks like it is more likely to lead to a stronger breakout or a break of this resistance, or in general, which of these examples looks like it's in a stronger uptrend, right? It's all kind of means the same thing. If you don't know, drop a guess in the chat and we'll talk about it. I don't like how quiet everybody is. Okay, we got another one from Cody. Cool. All right, good answers. Yep, everybody's on the same page. I 100% agree, right? The right example is going to be more likely to lead to a stronger breakout, right? And the reason being, first of all, starts with the volume. And this is an example that we talked about with Dell. This was a fun example that we pulled from a long time ago, where you can see this exact same concept occur, right? The first time we hit this 150 horizontal resistance, we get pretty far above average selling volume. And again, the next 3 times, or next 2 times, we also have that above average selling volume. Then as we continue to head up against this resistance, that amount of selling volume begins to decrease. And specifically in these two examples, right? All of a sudden, the amount of sellers at this level disappears, right? And what this means is, in general, right, people are going to have limit sells at or around a given area, right? Large institutions are probably looking to exit at specific levels. And the first time we hit that level, well, there might be a pretty big, nasty reaction off that level, which is what we're seeing in this example. And as we continue to tag up against that same level, the amount of sellers parked there begins to decrease, right? As more and more sellers begin to come out of the market and get their position off the table, slowly we see that selling volume begin to drop off. And in this case, we ended up gapping above that level. And lo and behold, it ended up being really strong support. So this is just a more drawn out example of the images we saw in the previous slide, right? That's all it is. All we were seeing is that when we first hit that horizontal level, we saw a rejection like this, where we see that larger than average candle spread with higher than average volume. And as we got closer to the breakout, we started to see bars that looked a little bit more like this, where we have this long downside wick and lower than average selling volume, right? And this is a concept that certainly doesn't go away. And it's not something that exists only in textbooks, right? We obviously reviewed at least one example there on Dell. And certainly there was probably at least 10 that occurred today on multiple timeframes that we could probably find if we kept digging through. But that's the big idea of this specific concept, testing the market. All right. Oh, man, I can't believe it's 5:30 already. How the hell is this taking so much time? All right. Yeah, that's a good point, River. Yeah, so River mentioned neither is necessarily time to get long. Yeah, that's a very good point. Fundamentally, right, the reason, at least in this specific example, which I didn't talk about at this time, we talked about it in prior lectures, but there's no real long entry at any point here, right? You're not going to get long below this strong resistance. The first opportunity to get long is right here, after we gap above and come back down and retest this 150. This is when it's time to start thinking about getting long. But as long as we sit below this horizontal resistance level, there is still technically that big level right above that we really just shouldn't be getting long. And obviously looking in hindsight, you know, you might ask, well, why didn't I just get long right here at the bottom or right here at the bottom? And it's like, yeah, you know, anybody can say that in hindsight, but that's just, it's completely unrealistic, right? And you wouldn't know at this point that sellers were going to continue to drop off, right? That's not a guaranteed thing. And volume price analysis is all about reacting to what's going on in the market. It's not about predicting, right? All we're doing is paying attention to what volume is doing and going from there. We're making educated decisions based on that. We're not saying, oh, we got a lot of high selling volume this bar, so probably the next time it'll be less. It's like, well, no, that's not how that works, right? That's a prediction. Okay, Norvin's got an interesting question. Do I always enter in the bottom of a green candle to get a better entry than chasing? Well, fundamentally, Norvin, you can never know if you're going to enter at the bottom of a green candle, right? I could probably count the number of times I've caught the dead bottom on a trade, like the actual dead bottom tick and the actual dead top tick. And there's only been like 3 times where I actually was right. And the other couple times I was at least 20, 30 cents off. So fundamentally, right, it's not possible to consistently bottom tick or top tick any trade. And if you are, like, I would love to pay you to teach me how to do that, because it's just not possible. And the people that say they're doing that are lying, right? The problem is that the people that create those bottoms and create those tops are the individuals who actually have the ability and amount of money to move markets, right? It's the institutions that purchase 1 million shares at, you know, SPY 480 that actually create those bottoms, right? And our job as traders, and especially our job as traders who pay attention to volume and price analysis, is that our goal is to capture the majority of the moves created by institutions, right? My goal is never to bottom tick. My goal is never to top tick. But my goal is to capture the bulk or the meat of any move in a stock, right? I'm never expecting to try and catch it at the bottom, and I'm never trying to expect to catch a top, right? It's just not realistic. It's an unrealistic goal and set you up for failure, right? There's no point in trying to trade like that.
It's pretty much getting the move in the middle, right? That's where all the money you pretty much
That's
make.
where the money's really made. Yeah, absolutely, right? The money's not made in trying to bottom tick or top tick. And like I mentioned, Norman, there's always going to be times where a little bit of luck's on your side and you catch a bottom and you catch a top. But the most important thing is that, if that's not something that happens because you're just really good at trading, right? It might help to have some skill, but you got to be a little lucky to catch a dead bottom or catch a top. It's not something that happens, just because you're good and you knew where the bottom was. Nobody knows that. Nobody knows where the bottom is. Nobody knows where the top is. And again, people that say they do or claim to are not being truthful, because you just don't know. You never know. A stock could always continue higher. It could always continue lower. Moves are always outsized. The market can always overreact. And that's just something that you fundamentally cannot predict, because just like humans, the market is all ran off a bunch of humans. Whether you like it or not, right? Whether the market truly is, probably 70, 80, 90% computer-based trading these days, well, those computers and algorithms are all trained by humans. So fundamentally, that humanistic behavior is still baked into every aspect of the market, and humans overreact to everything. And you can't really predict most humans, especially the ones that you don't know. All right, that was a little bit of a rant. Okay, so a couple other concepts that we talked about, and I want to try and blow through these a little bit more because I realize how long I'm going, is the volume profile. The volume profile is a really, really nice and clean way to visualize volume in a slightly different way. So throughout this kind of first part of the recap, we've been talking a lot about how volume can be represented from a time standpoint, right? So we're referring to the volume bars at the bottom of a chart along the x-axis. All of these histograms or plots represent an amount of volume over a given time. And that given time is based on the period of the chart that we're looking at. What the volume profile does is it plots volume on the y-axis or the price axis. And what this shows us is the amount of shares traded or exchanged at a given price. And it's simply a different way to visualize volume. All this shows us is where people or institutions are most interested in trading a given stock. So we could see in a name like Roblox, if we take a look at this, I'm assuming it's going to have a big fat profile all throughout. Oops, I got to make it a little bit more visible, which I can't believe Roblox is 100. That actually kind of pisses me off. I wish I didn't learn that today. Honestly, I'm kind of pissed about that. That's ridiculous. The amount of money I lost on Roblox is just, it's not good.
All right, Tostie. All right. Yo, Tostie, but Cisco, it's going to be a huge beneficiary.
All right, Norman, we'll talk about your ideas at the end. Not right now. We'll get there. Just stick around. I promise. All right. So anyway, generally, the large shelves on the volume profile, are also known as high volume nodes, can typically correspond to significant areas of support or resistance. So again, as I mentioned, these shelves depict the amount of shares traded at specific prices, which, as I mentioned, is an excellent way to visualize supply and demand zones. So with that, we can start getting into some real world examples. Before we get there, are there any questions or comments from people other than Norvin before we move on to the real world examples? And Norvin, if you do have an honest question or comment, I'm happy to take it. I'm just giving you hell. Can we see the previous slide? Yes. Cool. Anything else? Before we keep rolling, we can check in on our 1 minute chart real quick, see if there's been anything interesting going on for us to take a look at. Not sure. Oh, still a decent amount of volatility. You missed the entire series. This is all on YouTube. Yep. So let me find the link for you. So it should all, so it all lives right now in this latest lectures tab. So we have, let's see. Yeah, so it looks like we have the volume price analysis 1 and 2 here, and we have 3 here, and we're probably still waiting for 4 to get posted. Never taking Dark Magician's tab back. No, it's not going to happen. You can ask MMA to take that one back over. All right, cool. So let's start off with some examples. And we've spent a lot of time on the ES 1 minute chart, so I'm going to refrain from doing that any further. So I've spent a lot of time talking about volume price analysis and kind of how it could fit into your own strategy. But fundamentally, right, it's not something that is probably going to work for everybody simply alone, right? Volume price analysis should be a tool included within your tool belt of whatever trading strategy that's already in use for you, right? Just like any trading strategy, just like any indicator or any study set or anything in the market that's supposed to assist you, nothing has 100% likelihood of being right all the time. And generally speaking, some methods of analysis, specifically technical analysis, can be pretty complementary to each other. And for me personally, I love to use volume price analysis as well as the EMAs. Those are two of my favorite things to use in combination with each other. And I want to pull up just a quick kind of thing that I've shared probably a couple too many times, but I want to just talk through this really quick. So this is a book that I read probably over a few years ago now that just put a couple different names to setups that occur typically around or near the EMAs. I'm not going to go too in depth into any of this, but this is really where a lot of my trading system starts is with the 10 and 20 or 9 and 21 or sometimes even the 5 and 13 EMAs, right? So for me, a lot of my trades start on the daily or weekly time frame after reviewing these two sets of EMAs. And what I'm ideally looking for, I'm typically a long focused trader, right? Because got to be bullish, right? Being bearish is lame. And for losers and for suckers and for people like Norman. So for me, I'm typically more of a long focused trader and looking for opportunities to get long. So a lot of the places that I look to get involved in the market are right around here, right? When we're starting to see typically prior leaders turning up into a new uptrend, right? So in this wedge popper EMA crossback phase. So what that could look like is a name like CRWD, right? So let's take a look at CRWD here. Let's go ahead and load up the EMAs. Just do this. So CRWD, by all intents and purposes, has been a market leader over the last few months. Back in July of 24, they got hit with that bug where they basically nuked a bunch of the computers across the world due to an issue in one of their updates. Obviously recovered for that, and their earnings report showed over the next few periods pretty strong continued growth and retention of their customers. I think they had like 90-something% retention over the next few months after this incident, so people weren't scared away by CrowdStrike. And it turned into a market leader, right? Cybersecurity as a whole was a leading sector. And if we just chart out a couple levels here, just watch this 390-ish, 400 area. This name was doing real well before tariffs started to hit. And as we were going through the whole, kind of pullback throughout this tariff period, even Crowd started to show a little bit of relative strength. And if we compare this name to the overall tech sector, which we can do like this, let's compare these two names to each other. So just comparing these two spots, on March 7th and April 7th, Crowd basically created a double bottom. Whereas on March 7th and April 7th, QQQ set a lower low to the tune of 15% lower, right? So this is kind of the first thing that I start to look for is some amount of relative strength, right? That's always going to be something that interests me in any name that I trade, right? I want to see at least a little bit of relative strength. And this is pretty clear, right? And this isn't even about any volume price analysis yet. This is just kind of talking about how this starts to fit into my existing trading strategy. So starting here, right, we're seeing some nice relative strength on this name over the Qs, right? It's holding up much better than the rest of the market and specifically the rest of the tech sector, which is a great sign. Next up, it breaks all-time highs once again before the Qs do, right? So Crowd is going to be part of that tech sector. If we really want to be technical here, it's technically part of this IGV group, which is the expanded tech sector ETF, which it broke all-time highs far before most other names in tech, right? So this name is basically leading the entire market higher at this point as it relates to tech. So having those two things established is really, really important to start off with. And again, these are all things that are just part of my existing strategy, right? Forgetting about volume price analysis, forgetting about any of that. This is the first part of my trading checklist is I want to see relative strength. I want to see a name that performs better than the rest of the market. And these are two ways that me personally, I can really easily identify if a name is performing better than the rest of the market by looking at things like this, right? It's setting a double bottom or equal lows while the rest of the market is setting a lower low. It's breaking all-time highs while the rest of the market is below all-time highs. Those are two very, very easy ways to understand relative strength over a longer period, right? It's not by looking at the 5-minute chart or the 15-minute. This is long-term sustained relative strength, right? Because we remember from talking in our conversations in prior lectures, it takes a lot of time for institutions to accumulate large positions. It's not like they move very quickly. So it's going to need to be exhibiting relative strength for a decent period of time, right? It gives us that extra confirmation that, hey, this really is a standout name. So that's the first thing that I'm always looking for. Any comments or questions so far? Yes, Norman. Cool. All right, let's keep rolling. So the next piece, kind of like I mentioned, is I like to look for names early in this kind of new uptrend phase, right? So for me, that corresponds to right around this area, right? This is when this name was starting to come out of the bear market. We started to see this kind of newly formed uptrend, which was a really ideal place to begin getting involved. Now, obviously, this is in hindsight. Obviously, there was a lot going on in the world at this time, so pretty hard to make the call to get involved at this point, but it wasn't the only opportunity to do so. So the next time where we started to see a more realistic entry is this deep pullback here back into the EMAs. And again, one very interesting piece that we can see here is look at the volume on these sell days, right? This is an interesting one to me. Here, for example, is an interesting one. We see a decently sized pullback on this day with barely any volume down here. And we do have these kind of larger days here and here, right? Two pretty sizable pullbacks, but we move right through them, which is a little bit of a volume price anomaly, right? We see kind of increased volume as price moves down. We're seeing that above average volume, but we're not seeing follow through, right? We're seeing support at these EMAs, which actually makes this a little bit more of a bullish sign than not. Obviously, in this name sitting right below all-time highs, it's pretty difficult to just say, let's get long. So I'm not sure if I would have been super eager to buy into this name right here, to be honest. It's probably something that I would have rather have been a little bit more patient on, which it did give the opportunity to get in once again, right? And let's take a look at this. So this day here is a fascinating one to me. Again, we have this earnings report. We have a lesser than good reaction to earnings, but look at this volume that we see here, right? Look at the amount of volume that we see as we hold this previous all-time high on a post-earnings day as support. When was the last time we saw volume like that? This is one of my favorite comparisons to do. We see above average volume. When was the last time we saw something like that? Well, the last time we saw something like that was here. And this is a very interesting example. Here was the last time we saw volume like that. And we actually went on to see lower lows here, right? We actually ended up still declining about another almost, 20% from these lows. So interesting comparison here. Even looking back further, when we see volume kind of on a similar level, we saw a big breakout right around here. And then obviously here was when they were going through a pretty heavy news cycle. So bit of a mixed signal with this level of volume on this specific name. However, just looking at the context in this section alone, we have really high volume. We have a decent bar holding prior all-time highs after earnings, right? Doesn't necessarily mean you need to get long on this specific day, but seeing, again, continued wicks off of this same high, continued holds of this same high is certainly a more bullish than bearish indication, right? We also have this uptrend with EMAs, EMA 10 over EMA 20, which so far has made for a really strong stock, right? It continues to exhibit a significant amount of strength. And so far, it looks like it wants at least 500 and hopefully a lot higher. That's the first example that I wanted to talk through. It's one of my favorite stocks right now and has been a real fun one to be paying attention to recently. I like Always Be Winning's idea of taking a look at Hood. I think that's another excellent example, and we'll probably head to that one next. All right, let's take a look at Hood, and we'll close it out with whatever the hell Norman wants to look at. So the great thing about Hood is it shows basically all the same similar characteristics as Crowd, right? I think a lot of us know Hood was incredibly strong before the entire tariff situation. Hood was an absolute ripper. It was basically outperforming the entire market, including a lot of our big names. It was outperforming names like Apple, Amazon, Google, Microsoft. It was outperforming most other brokerages as well in financial services, including SoFi. It was outperforming banks. It was outperforming A-Firm, which isn't really in the same sector, but kind of analogous to each other, right? They're all doing some kind of financial services, and A-Firm still is kind of lagging today. So
It's not
Hood really,
outperforming Circle though.
it's Circle. What is Circle? I don't even know what that is, Norman. Wow, did this finally get acquired? That's impressive. Anyway, I don't know what you're talking about, Norman. So long story short, right, Hood shows all the exact same characteristics of Crowd, right? Real strong stock before this pullback. And then once we finally start to bottom out, right, bottom out on a key level, real high volume, we start to get this exact same kind of action where the EMAs begin trending to the upside. We get this nice consolidation right at the EMAs before moving higher. And then again, the same thing, consolidation right below all-time highs. They continue to move higher. And in this specific example, we also got real nice follow through as we broke out, right? So this is just extra confirmation that this is a strong breakout. If we zoom into this specific area here, we see rising volume as price moves above this breakout level and also leaves a really nice open gap, which ended up getting filled and ended up being the bottom on this day too. So, I mean, I could re-explain Hood from scratch, but really it shows all the same characteristics as Crowd. And these are the exact kind of names that I personally want to be involved in. These are the strongest names in the market. These names have the highest probabilities of continuing higher and working in my favor. And these are the places that I like being involved in. I'm not interested in trying to catch the bottom on something, and I'm not interested in trying to catch the top. But what I am interested in is using relative strength, using key levels, and a little bit of volume price analysis to determine which names are the strongest and how to find high quality entries on these names, which we didn't talk too much about entries and exits today. We'll probably need to focus on that a little bit more in the next class. And we'll probably need to do a lot more examples next class too. But that's the big idea, and that really gets us started in examples. Any questions other than Norman's? I know we'll talk about your names, Norman. I'll be nice to you because I was kind of mean to you earlier. So we'll look at the things that you want to look at as long as nobody else has any other questions. I checked Starbucks out before Norman's. Yes. All right. Well, if there's nothing else, we'll look at some tickers to close the night out. Thank you, Scotty. I appreciate your time. All right, Starbucks. Cody, in line with kind of what we've been talking about today, my first instinct from Starbucks is to stay away, right? This is going to be a good example of a name that's not really showing relative strength. And there's so many other names in the market that are. We just looked at two of them. However, I will say, right, while it's not necessarily the best name to trade in the market, if you have maybe a longer term time horizon, it looks kind of decent right here, right? From at least like an EMA and volume price analysis perspective, it looks decent, right? It just had this nice base breakout. We see a little bit of above average volume as price continues higher, and also a decently nice average or below average volume pullback right back into the EMAs. So while this isn't a name that I would typically, jump out of my seat to get involved in, I don't hate it. And if you have a little bit of a longer time horizon, I actually kind of like it. But is it a trade that I would get myself into? Probably not. But I mean, people make money in different ways than me, right? I'm not, the all-seeing eye here, and I don't mind it actually. It's not. Yeah, it's a decent chart. Yeah, I mean, we got some nice kind of volume price analysis characteristics. We have this nice high volume bottom here, and also another one right around this area. No real crazy above average selling volume ever since we broke out above this spot here, and a decently average or below average volume pullback, which all of those are very good, normal things. So if I had to grade this setup, I'd probably give it like a B or a B plus. And the reason that I give it a B or a B plus is because it's just not showing relative strength. If this name was like, really showing relative strength at bottom before the rest of the market, it would be in A plus territory. But for me, it's not all the way there yet, but doesn't mean it's not tradable. And just because I say I don't want to trade something doesn't mean that you shouldn't. All right, Norman, you got a lot of ideas here. All right, Reddit. Let's take a look at Reddit, RDDT. Yeah, Reddit's in the exact same boat as Starbucks for me, Norman, but it also had an excellent day today, which is pretty interesting. But in general, in the same boat as Starbucks, right? It's not a name that's showing relative strength. It has showed relative strength in recent times, which makes it a little bit more interesting for me, and also set a higher low recently. Maybe I like this one a little bit better than Starbucks, Norman, just because it's had some real good strength recently. But yeah, I'd probably give it like a B plus, right? I like this high volume breakout. I don't love this high wick. I think ideally we see a retest of this 126 area before getting involved to the long side. But I don't mind it actually. I mean, I think it looks fine. Really nice base breakout so far. Yeah, I'd give this one a B plus. I think it's definitely something that you could trade, and it looks like it wants higher. I would say I'd like this one a little bit better than Starbucks just because of its prior strength. That's my main. That's the main thing this one has going for it. I don't mind it though. All right, CRCL. Oh my God. Norman, I don't know what to tell you about this one, bro. I mean, this one literally just IPO'd. I mean, yeah, obviously it's on a heater. It's tripled since its IPO and it's been out for 3 weeks. I don't really have much to say about this. I mean, it's on an absolute heater. For me, I mean, I wouldn't trade it right now personally. I would like to let it kind of exit this IPO period at this point if I wasn't already in. But I mean, huge ripper, but I don't know anything about it. Cisco, this one's a nice one. I like this one. It's obviously sitting right at all-time highs, so you got to be a little bit cautious there. I also haven't looked at this name in a while, but above 66 is when it's time to get involved. From a volume price analysis perspective, real nice above average volume there and there as well, both on bull days, so that's a positive. I like it. Yeah, it's probably also in B plus territory and could be real nice if we get a break and retest. Something like something like this would be really nice. Lou, yeah, I mean, it's on a ripper, Norman. I mean, I don't know what to tell you. That there's no entry for you here, in my opinion. If anything, your entry was right around here, but that's come and gone. I mean, yeah, I don't know what you want me to say about this one. It's on an absolute heater. If you entered, congratulations. If you're not in, I probably wouldn't be buying right here if it was me. Decent names though, Norman. Honestly, this was a better list than usual. Normally, all the names look like LEU. So I actually like your watch list right now. I'm a fan. That's when you know there's going to be a problem. Me and Norman agree on a couple things. Just watch out. We're on the way. We already looked at Roblox. Do we short it? I don't know, bro. You don't want my luck on Roblox. I don't have very good Roblox. Roblox is on my do not trade list these days. Should have hit it there at 47 though. That would have been crazy. Orly, can you look? Yeah, let's look at Orly. O'Reilly's. Wow. This is crazy. Wow, O'Reilly's has been an absolute tank. How did it not get hit at all for tariffs? That is impressive to me. Wow. Really impressive that this didn't get even hit a little bit at all. This is shocking actually to me. This actually doesn't make sense. I don't even have words. This chart doesn't even make sense to me. It makes no sense why this name is trading so well during tariffs. I mean, all they sell is auto parts, which are all made overseas and in Mexico and Canada, and there was no reaction to any of that. It doesn't make any sense. O'Reilly's does repairs? I didn't know that. Huh. They don't do that in my area, I guess. Anyway, I mean, it's definitely trading at all-time highs. In terms of like a weekly setup, it's not near any like big weekly levels. So there's no like real strong support in the area. Let's see what the longer-term moving averages are doing. Yeah, I mean, it's below the 50 simple moving average and the 20 simple, and they're trending down. So that's a red flag to me. Kind of does look like it wants to come tag this 200 simple moving average. It hasn't been there in a year almost. I wouldn't be surprised to see it come down to 85, but I don't think I would short it either. It's just suspiciously strong. I have no idea. I know too much about our rallies to give too much an opinion right now. I feel like I need to look into the fundamentals now because this is just kind of creeping me out. MSTR. This one looks decent. Nice little wick off the 50 simple today. Yeah, this is starting to look kind of good. Really nice consolidation. It just needs to get back above these EMAs, but it's starting to look pretty decent. What is a Coinbase doing? Yeah, similar idea here. I like Coinbase better than Master though. Actually, the reason I like Coinbase better is it's sitting above these EMAs. Wow, Coinbase actually looks like it's almost ready. Check this out. 246. I like this inside day on Coinbase. The Coinbase looks pretty good, in my opinion. Nice above average volume yesterday too. Wow, I really like Coinbase. I'm gonna even add this to my watch list, actually. Give me a second, I gotta get this on here. This is an interesting one. All right, Norman, last one. Hut. I don't think I like Hut, but we'll look at it. Yeah, I'd rather trade other names in crypto. Not Mara, not Riot. I like Coinbase a lot. I mean, this looks like it's ready, if you ask me. Weekly too. I like it. All right, everybody. Well, I appreciate your time. This was a fun one. We will see you guys all in the next lecture. We'll do a lot more examples, and I'm hoping we can have some discussions too about how we're using volume price analysis in our own trading. So with that, that's going to do it for me. Again, thank you guys so much, and I hope you have a great rest of your night. And I'll see you guys all in the next one. Thanks for coming, everybody. See ya.